Hey, how's it guys? It's MJ, the Student Actuary, and in this video, I want to talk about the challenges of investing in Africa. So what I've done is I've read this paper called Investing in Africa, a Practical Perspective for the South African Institutional Investor. It's written by a company called Investment Solutions, and they're a great company. Go check them out. They've got a cool YouTube channel, and what they've basically done is they've written this whole report, which I've basically just taken the graphs and I'm going to talk around the graphs. So it's all of their work. I'm just doing some sort of commentary on top of it. So you can see here, these are the authors, and I mean, one of the main reasons why they say you should invest in Africa, they've given the 4 big reasons here, is that Africa has strong growth rates, it's increasing its urbanization, there's favorable demographics, and there's a growing middle class. Now, what I want to do is focus more on the challenges or the risks associated with Africa. And one of the first things I just want to mention is that in Africa, it's only Egypt, Morocco, and South Africa that are considered as emerging markets. The rest of the countries in Africa are considered as something known as frontier markets, which means they're even more underdeveloped than the emerging markets. So I thought that was quite interesting. And yeah, we're just going to be going through these slides which they've made and everything, and just going to be pointing out some interesting things. So first off, what you can see is that developing Asia has performed the best in 2013 and 2014. In second place, we do see Africa. So Africa did come in second place. So it does provide some nice, returns, especially in an environment where interest rates are very low in the developed world. It's really cool that you can get some high returns by coming to Africa. The other big benefit with Africa is the very low correlations. If you look in the very first column, even just with, say, South Africa, Morocco has only an 8% correlation with South Africa, and Egypt only has a 6%. So that is, that's really cool. It's really cool that you can find these low correlations. So in a nutshell, the big advantages of coming to Africa is that we offer some high returns, not the highest, Asia is still the best, but we also offer a very low correlation, although correlation tends to dissipate, at extreme market events. But while everything's running smoothly, we do have some nice low correlations, introduces great diversification benefits. But what about the challenges? I think when people think of Africa, the number one problem a lot of people think about is corruption. And I think if you see here, South Africa, we're with the global average. We're like average when it comes to corruption. But if you look at all the countries that are really bad or have a lot of corruption, Somalia, Sudan, Chad, Burundi, Zimbabwe, Equatorial Guinea, Angola, Kenya, Nigeria, you can see they all have very, very bad corruption scores compared to, say, countries like Denmark, Finland, New Zealand, and Singapore, which have like hardly any corruption. Another thing with Africa is that you can see that when we look at, say, the bond market, how much of the bond market is capitalized compared to the GDP, you can see how small we are. So we have a very, very small bond market. South Africa, you can see with government and corporate together, we're only making up 50% of our GDP. Now compare that to Asia, where they're at like 350%. Although I do think that number is a little bit exaggerated because it includes Japan, and Japan, has got quite a crazy, percentage of bonds to GDP. Unfortunately, they didn't include America in this graph. It would have been really cool to compare America, but interesting to see how small Africa's bond market is. Now, this does present opportunities. It means that the bond market does have room to grow, whereas, say, Asia, you don't want to grow that bond market any more than it is there. In the next slide, I just put they had a whole bunch of bonds. I went and wrote in the credit rating just so that I could help myself check it out. Interesting things to see was how much oversubscribed these things were. You can see 15 times oversubscribed in Zambia. And you can see the yields are actually quite low considering the poor credit rating. So that I thought was quite interesting. The size of the issues are quite small, and it was quite interesting to read the purpose. Interestingly, Senegal, who had the best credit rating, had the highest yield, but then they weren't telling the people what they were going to use their bonds for, so that was a little bit dodgy, although even that one got a 4 times subscription. This slide over here, we're seeing which countries are seen as being investment grade. So South Africa, Namibia, and Morocco are kind of like your investment grades, with Botswana being quite an upper to medium investment grade. We're going to come back to Botswana a little bit later. They've got something very interesting with their stock market. But what you can see is that the rest of Africa that actually has been rated, so you can see majority of it hasn't even been rated, but that which has been rated is either highly speculative or speculative, which means it's not a very good match for your institutional investors, say pension funds, life insurers, the really big players in the market. This next slide here is looking at, say, private equity. Africa is the blue block, and you can see it's really small. So private equity in South Africa is very small. The reason for this is that there's not that many private equity managers who have long track records in Africa, and it's really difficult to do business. We're going to see a few more challenges later. Whereas if you say China's huge, and Latin America is also doing very nicely over there. Next, I wanted to show you the amount of companies that are listed on the various stock exchanges in Africa. What you'll see is that there's not many. There's not many companies that have been listed, and that is a problem in the market. It means there's not that many sectors to choose from. Interestingly, Egypt, look how they had like over 1,000 companies like back in 2002, and then 10 years later they got completely wiped out. I think the reason for that was like the Arab Spring, but I don't know exactly, was the Arab Spring in 2012 or 2013 or when exactly it was, but that is a big surprise how many companies got whacked off that. South Africa also saw a decline. South Africa, we've got quite strict regulations. Institutional investors tend to stay with the top 40, so companies actually don't find it that feasible to list. They rather look at private equity deals where there's just less paperwork. This next graph was a little bit confusing because what we got in the blue is market capitalization in 2012, and then in the green it's the growth in the capitalization. So you can see Uganda and Zambia had this massive growth, but they're coming off a very small base. Interestingly enough, Zimbabwe had like zero growth, probably negative if this graph was showing it. South Africa, you can see we are the biggest market with capitalization. Although interestingly enough, Nigeria was reported to have passed us last year, and if we see Nigeria at this stage wasn't actually that big, but they did have quite a nice growth. Also look at your countries, like I said, Morocco and Egypt. Those are your merging. I think Nigeria is now considered emerging as well. I don't think it's a frontier anymore, but I do stand correction there. If we look at stock market capitalization as a percentage of GDP, this is showing like how developed the market is relative to its size. First thing you should check out is how Zimbabwe has been absolutely smacked by a lack of leadership in their political arena. So that's a very bad thing to see. Egypt also saw a little bit of a smack, but I think, like I said, that was because of the Arab Spring. I was curious as to know why Ghana decreased. I wasn't expecting that from Ghana. I would have expected that to increase. But you can see otherwise, besides those countries that I've mentioned, there is a little bit of increase, except for South Africa. South Africa, I think, has reached that maturity. I actually consider South Africa more as a developed country than emerging, although it's kind of like it is a bit of a weird hybrid between the two. If we look at annual turnover as a percentage of market capitalization in 2011, here you can see how big South Africa is, with Egypt in second place. Surprising is Zimbabwe is still there in third. I really tried to find out where USA and Japan was. What this graph basically is saying is how liquid these markets are. So the one measure is to look at annual turnover as a percentage of market capitalization as an indication of liquidity. So we can see South Africa has great liquidity, Egypt has great liquidity, and Zimbabwe, funnily enough, despite its problems, still has the third best liquidity in Africa, followed by Tunisia. Morocco's there, Kenya, Nigeria, and then Mauritius. That's very good for Mauritius, being a tiny little island. Their economy has done very nicely. Speaking of how economies have been doing, let's actually have a quick little look at how they have all been jumping around. I mean, check Egypt. Egypt did an absolute boom in like 2005. That is massive, and then it just crashed. Oh, dreadful. Zambia also has been incredibly volatile. It's up and then it's down. Mauritius seems to be doing quite nicely as well. Unfortunately, they didn't show South Africa because that would have been quite a cool country to compare. Okay, I just found this very interesting. These are the exchange trading times. Botswana is only open for 45 minutes. That is insane. Only 40. It's like, guys, we're gonna trade. Okay, everyone, make your trade. Make your trade. Like you can't go to the toilet during that time because that's the only time you have all day to make your trades. I thought that was quite interesting. For those of you looking at saying what is BRVM, what that is that it is an exchange that has a whole bunch of countries like Ivory Coast. I think Tonga is also in it. A few countries around it, they use one exchange, which I think is a great idea. Rather than each country having their own little exchanges, it makes sense to group them together. Then I looked at it, I wanted to see why, coming back to private equity, what causes managers to stay away from certain countries. I did have to Google what MENA was, or MENA, however you pronounce that. That's Middle East and North Africa. It's interesting. So when you consider Africa, there's basically three parts of it. There's South Africa, which people consider by itself. Then there's Sub-Saharan Africa. And then there's North Africa, Egypt, Morocco, and Algeria, which they kind of consider more as to be the Middle East. It's weird how they've done it and not just, Africa as a continent. But interestingly, managers don't think that. Please give me a like if you enjoyed this video, and I'll make more types of videos like this if you enjoyed it. Thanks, guys. Let me say goodbye. Cheers.